From fracking to refinancing, and from Grangemouth to talk of a Chinese slowdown. 2013 will be remembered for many things. But how did INEOS fare during the period, and how are things shaping up in 2014?
The main part of INEOS is INEOS Group, and actually the results were very, very similar in 2013 to 2012 overall. And the story, I think, is still very similar, which is continuing record performance in the USA, O&P, North America, really benefiting from the shale gas advantage, but still difficult for us in Europe. And we've also seen businesses like nitriles and phenol, who export a lot of their products to the Far East, hit by the slowdown in China. But overall, the group performed well and at a very similar level to the previous year. So I think 2013 was a good year. We've seen the kind of what's become a very customary bounce in January. You know, typically you see a slowdown in the whole industry in the fourth quarter, but what we've seen, January's results were good. Nitriles and phenol, I think, responding to some outages on the supply side, so the market's tightened up a bit there, and O&P North America still performing very well. We've still got the challenges in Europe, particularly Southern Europe. The UK is not great, but I think the big project we're doing in Norway with the bringing US shale gas in there is quite an exciting project.
While Germany, Scandinavia and Benelux continue to provide the foundation for the group's profitability in Europe, there's no doubting the massive contribution that the US is currently having on the company's bottom line.
I think when you look at where the profits come from in INEOS over the last 2 years, it's increasingly obviously from the US. In 2013 it was somewhere between 65 and 70% of INEOS Group's EBITDA, up from probably 60% the year before. As regards the shale gas advantage, we don't see any change in that in the medium term. It's not the only reason we're doing well in the US, but it has been transformational, obviously, in terms of margins. And the landscape looks set fair for, you know, touch wood, the next few years. US investment is very much probably our #1 priority. We've announced 3 big new projects. The polyethylene plant, joint venture with Sasol. The possibility of a new ethylene oxide plant and also a new oligomers plant. And on top of that, we've just expanded the Chocolate Bayou cracker up to, I think it's £4 billion a year. So quite a lot of focus on the US because obviously the returns are very attractive. The Asian investments that we've announced obviously are the joint venture in phenol. We just signed the joint venture agreement with Sinopec, and the new plant for nitriles. They're still the growth areas for those businesses, so we still think those investments make sense.
And something else that made perfect sense was approaching the markets with a view to another round of refinancing.
The objective was the same as it usually is, which is to reduce our interest cost and push out the debt maturities. And this time we were looking to refinance a €1 billion junior bond. It's actually the last piece of debt that we put in place way back in 2005 when we bought Innovine. And that old bond was due to mature in 2016. But at the same time, we went out and also did a repricing consent request on our $4 billion term loan. The name of the game there is, you know, if you can go to investors and say, look, based on the strength of the market, we think you should reduce your interest costs. And that was the exercise that we kicked off last month.
The refinancing was very successful. I think the reaction of investors was fantastic. What I'd call it is, in terms of the bond deal, was a blowout, is the phrase that's often used by some of our advisors. The overall bond was 7 times oversubscribed, which is a fantastic outcome. And what that did enable us to do was reduce the overall pricing that we're able to get on that bond. So what you can do is you can use that demand to be able to push down the interest rates that we were going to get. We were refinancing a bond that was just under 8% in terms of interest rate. Our initial expectations were that it was going to be about 6.25%, which again was a significant saving. We were able to use that demand to push that even further down to just under 6%, so 5.75%. So overall, in terms of interest savings, which is the key thing we wanted to achieve, we achieved just over 30 million per annum by doing that refinancing. And if we combine that with the refinancing that we did during 2012, so a bit literally over the last 18 months, we've managed to reduce our overall interest burden on the business from 550 million to 385 million, which is a huge saving over the last 18 months. We've got a lot of projects out there that we'd like to use that cash on. So saving 165 million in interest per annum means we can do quite a lot of those projects, so that's a big upside. A link to that, obviously the credit rating agencies have looked at us again. I'm pleased to say that recently Moody's have upgraded us. So that puts us in what I'd call the single B territory. They're on the same level as Standard & Poor's. That enables us to get a bit more credit with suppliers, etc. So that improves our cash flows as well. I think investors are comfortable with us. I think we've spent quite a bit of time getting to that stage. We've invested in time in investor relations to make sure that we're quite transparent with investors. I think that's helped us to enable us to get to a good pricing and a quick process. We're kind of opportunistic. So if there is an opportunity in the market to reduce our interest rates or extend our maturities, then we're always ready to do that. And I think that's kind of linked to the entrepreneurial spirit that we have within INEOS to basically take that opportunity when we can. And that's exactly what we did with the recent financing that we did this month.